I was super impressed with the reception of hBTC. We even had Saylor shouting you guys out on stage at Bitcoin
Yeah,
Vegas.
right.
Very
That was
special.
great.
Can
Yes.
you give us any idea of how that came to be? How did Saylor get acclimated with hBTC and what you guys were doing?
Welcome to Good for Bitcoin, a weekly show recorded live every Friday, where we recap the top events of the week and talk about everything that is good for Bitcoin. If it's built on Bitcoin, then it's good for Bitcoin. Let's get started.
Content shared on this podcast is for informational and entertainment purposes only. It does not constitute financial, investment, or legal advice. The views and opinions expressed are those of the host and guests and do not reflect the official policy or position of any other agency, organization, or company. We encourage you to conduct your own research and consult with a qualified professional before making any financial decisions.
Well, hello, everybody, and welcome to Good for Bitcoin, a very special episode of Good for Bitcoin. My name is Brandon, and today we sat down with Jakob, who is the founder and CEO of Hermetica. Hermetica recently launched a new Bitcoin yielding product called hBTC that is entirely on-chain. As part of that announcement, they also announced that a portion of that Bitcoin yield would be funded by STRC, so I knew we had to get him onto the show to talk all about it. We took a deep dive into Hermetica's USDh and hBTC products. And something that I've always appreciated about Jakob and Hermetica is that they don't shy away from risk and transparency. So we took a very deep dive into exactly where the yield comes from. They also today announced a wider availability of hBTC. So let's get into my conversation with Jakob and hear all about it. All right, we have Jakob from Hermetica here. Jakob, I think I've had the pleasure of interviewing you at least a couple times in the Stacks ecosystem over the years, but I think this is your first appearance on Good for Bitcoin. So welcome to the show.
Yeah, thank you. Nice to be here. Thanks for having me, Brandon.
Yeah, super excited to dive into all the really awesome announcements and things that you guys have been launching over the past few weeks. But before we do all that, maybe for our listeners who might not be familiar with you or with Hermetica, can you give us maybe just a quick background, TLDR, on how you got into Bitcoin originally?
Yeah, absolutely. So yeah, my name is Jakob. I'm the founder CEO of Hermetica, and my background is quite varied. Got into Bitcoin around 10 years ago now. So it's been like a decade of building in the space, working in the space. My background is as an engineer, as an entrepreneur, has always been building things in my spare time, even as a teenager. During my time in my early 20s, I built a business in Africa. We sold and produced eyeglasses in sub-Saharan Africa. And really around the 2016 timeframe, I got into Bitcoin, really fell in love with the idea of decentralized money, money that is not controlled by the state, money that is really, in my opinion, the foundation for freedom and prosperity across the world. So fell in love with that. And that led me down many different rabbit holes, including building a Bitcoin mining company in 2017-18 timeframe. I ended up working at Kraken, the digital asset exchange, for a couple of years. Did the M&A there and worked on the security side. Yeah, really for the last 3.5 years, I've been focused on Hermetica, which is the company that we have today. And our mission is to bring Bitcoin and Bitcoin-backed products to more people and really enable Bitcoin as the reserve asset and enable like a financial system on top of Bitcoin.
Perfect. Thank you for the intro. Yeah, I think I feel like I hear this story quite often, especially if you get outside of, the US and outside of maybe like some specific European countries. You definitely feel the need for Bitcoin a lot more in other countries. Is that kind of how you originally got introduced to Bitcoin? Was like your work in Africa and in those areas, or?
Yeah, so I mean, my work in Africa, I think, exposed me to the reality. I grew up in Germany. It exposed me to a reality that is not the Western financial system and that really opened my eyes to the reality that most people in the world don't have reliable money and don't have reliable property rights on their money and really are in some shape or form controlled through the money system. There's a lot of political control that is exercised through the money system. And so I think that gave me the perspective that when I found Bitcoin, I saw it, one, from the engineering side as a beautiful technology, but then also understood very quickly the importance and impact it can have to create a reserve asset and in a money that is uncontrollable, and what that really means for humanity and freedom. And I think the combination of my technical background and my experiences in Africa and other less developed countries is like what drove my passion for Bitcoin.
Yeah. That's very cool. So we're going to go into a deep dive on sort of your more recent announcements, but maybe to set the stage with Hermetica, how I originally got introduced to you, and of course is still a main product of yours, is USDh. Can you talk a little bit about how USDh originally launched and what was the inspiration for that and how that has kind of evolved over the years?
Yeah, so USDh is our stablecoin product, our Bitcoin-backed stablecoin product. We launched that about 2.5 years ago, originally actually on Runes and then also on Stacks. And the vision behind that is, one, to have a stablecoin that is outside of the traditional system and fully backed by Bitcoin. And then additionally, and this is much more the focus today, is having a yield source that is a dollar yield source that is by Bitcoin. So how it originally works and how it works today is a little bit different. How it originally works is essentially a spot Bitcoin position paired with a short on the futures market. So we essentially take Bitcoin and we synthetically hedge out the dollar exposure of it and basically create Bitcoin without price fluctuations, like a flat coin or a stable coin. And that works by going short on the futures market. So we lock in the dollar value of Bitcoin. We do that on the biggest centralized exchanges in the industry, Bybit, OKX, Bitget, and Binance. And we use institutional grade custodians, mainly Copper and Sefu, to hold the Bitcoin and make them available on the exchanges without exposing the Bitcoin to actually the balance sheets of the exchange. That was the original version of USDh. The yield is generated by us being short in the futures markets. We collect what is called a funding rate. We essentially, you can think of it, we're lending capital to traders on the futures markets that want to go leverage long Bitcoin. So it's in a way a credit instrument as well. We're providing leverage to futures traders and basically allowing them to borrow the Bitcoin. That has generated around 10% annualized returns for the last 2 years. It's fully backed by Bitcoin. It's live on Stacks now. We actually deprecated the Rune side just recently. And with the advent of digital credit, STRC, we saw the opportunity to bring a second yield source into USDh, and that we have done with STRC. So now USDh is backed by on the one side basis, which is the spot Bitcoin with a short future side, and on the other side, STRC, which is essentially a digital credit instrument where we lend money to strategy through their preferred equity, STRC, and we can talk more about that, obviously.
Yeah. So when you say backed by Bitcoin, what does that actually mean sort of in practice with USDh? Because I think of USDh as more of like a stable coin.
Yeah.
So there's obviously some differences between how USDh is backed versus how maybe like Tether is backed, or maybe not, because Tether has some Bitcoin reserves as well.
Yeah, Tether is actually very interesting. Tether is backed by Bitcoin, gold, and a lot of treasuries and dollar instruments. And how it's backed by Bitcoin is that the backing assets, the assets creating the value for USDh. So there's USDh in circulation, which is a liability to us. And the assets that are backing those liabilities, if you use the accounting structure, are Bitcoin in the exchange. The way that we can do it with the same amount of Bitcoin, we're slightly over collateralized with our reserve fund. So there's a buffer there, like a 1.5% buffer. But how we can do that is that we have the Bitcoin in the custodians, but we essentially take out any exposure to the price through the futures markets. So we hold Bitcoin in the custodian and we short X. We go the same amount of Bitcoin that we hold, we go short on the futures market. And what that does is that it essentially is Bitcoin without price exposure. So if Bitcoin goes up or down, that doesn't change the dollar amount of the Bitcoin that we hold. It changes the Bitcoin amount that we hold. So the Bitcoin amount goes up and down with the price, but the dollar amount stays the same.
How often are you having to like rebalance that as the price of Bitcoin does go up and down, or how does that mechanism work?
Yeah, so the price of Bitcoin going up and down doesn't necessitate any rebalancing because
Okay.
we're 1x short. It's coin margin futures. So we stay short as the price fluctuates.
I see.
What changes the balance is the yield coming in. We're getting paid every 8 hours from funding rates, and that yield is paid in Bitcoin. So we automatically hedge that as well. So we get paid in Bitcoin, we hedge that out. So we're back in a fully dollar denominated position. There are instances where funding rate fluctuate, where they become negative, and then our protocol reduces the exposure to Bitcoin and the futures markets and actually goes into USDC. So if you look at our transparency dashboard today, you can go to app.hermetica.fi/transparency, and you see exactly the breakdown of how it works. The Bitcoin that you see in the backing assets are hedged, and then there's a portion of liquid stables. So we're able to go from a Bitcoin plus short position into just liquid stables, and that is USDC and USDT if the funding rate environment is not profitable. And then obviously also we have to make sure that people can mint and redeem, and for that we use USDC mainly. So if new capital comes in, it comes in the form of USDC, and then we deploy that into Bitcoin plus a short position and vice versa.
So that perfect segue into my next question. If I'm a user and I have like USDC or USDT on like Coinbase or Ethereum, how would I actually go about acquiring USDH and starting to earn a yield on it?
Yeah, it's actually quite simple. On the USDC side, we don't have USDT integrated, but mainly USDC. You can connect your Ethereum wallet to our website and do a swap that uses the USDC bridge, USDCX bridge on Stacks, where you essentially go from USDC on Ethereum to USDCX on Stacks, and then you swap the USDX for USDH on Stacks through the Bitflow pool, and you can get access to USDH that way, and then you stake it for the yield. And you can do the same in reverse. So you can access USDH on Stacks through Ethereum-based USDC today. If you are a larger institution or larger user, you can also directly onboard with us. That involves KYC, KYB. And then you get access to the mint function in our app, where you can essentially send us USDC directly and mint one-to-one without any fees, without any slippage, USDH on Stacks. So those are the two paths.
Very nice. And I know the Stacks team is also working on onboarding additional networks as well. So not just Ethereum, but you'll soon have like Solana and Arbitrum and all the other networks eventually to make it even easier to get into USDH.
Hopefully.
Yeah. So a few weeks ago, main reason that I reached out to you, you guys announced that Hermetica was integrating STRC yields into your products. So I knew we had to get you on the show to talk more about it. If you're not familiar, at the start of every show that Kate and I do on Fridays, we start with like a segment where we talk about which public companies are buying and selling Bitcoin. So naturally, we're talking about strategy every week. So it seemed like a perfect opportunity to have you on. Strategy and Saylor, they've been buying BTC relentlessly over the years. As of this week, they actually just, I believe, surpassed over 4% of the entire Bitcoin supply. So they now hold over 843,000 Bitcoin. But on top of just their public stock, which is MSTR, they've also rolled out these various offerings like STRC, and they have a few others as well. But STRC is kind of their main kind of credit product. Obviously, you don't represent strategy directly, but maybe in your own words, can you describe a little bit about what STRC is and how it works relative to their common stock, MSTR?
Yeah, absolutely. MSTR is the common stock, which essentially is the equity in strategy, and STRC is what is termed a preferred equity, which essentially is also a stock. It trades on the Nasdaq and is also fluctuates with the price and supply and demand of that stock. But it is a preferred equity in that it is senior in the capital stack and therefore would be first in line in a bankruptcy claim to the underlying assets, which obviously, as you mentioned, there's quite plentiful of Bitcoin in strategy, 4% of the supply, 70 billion-ish at this point in Bitcoin. The special thing about STRC is that it pays a monthly and soon to be bi-monthly dividend of an annualized rate of currently 11.5%. And so if you hold STRC on the dividend date, which is currently the 15th of every month, you get paid a dividend, a quite hefty dividend for holding that. And it is designed, the preferred equity is designed to trade around par, which is 100. So if you look at the price action of STRC, it fluctuates. I think they call it a 2 vol in the last couple months around 100. It goes down after dividend gets paid out. It goes back up when people want to get the dividend closer to the dividend date, and has a very deep secondary liquidity. I think it trades around $300 million every day, give or take, and has over $8 billion outstanding in open interest. And so it's essentially, if you simplify it, there's a lot of details there, right? If you this is not investment advice. If you invest in it, do your own due diligence, do your own research, because there's a lot of details that you need to understand. But on a high level, conceptually, you can think of it as giving Michael Saylor and the strategy team a loan and getting paid 11.5% in yield in the form of a dividend. We take this instrument, STRC, and integrate it into USDh. And essentially what the benefit or the value add there is, and this is what Michael Saylor calls digital money. And he talks about this distillation process, financial distillation process of going from call it 50 vol, 30 CAGR, 30 annualized return asset like Bitcoin, which has great upside, but is also extremely volatile. It goes up and down a lot, to a derivatives product like Stretch, which is, call it a two vol. It still fluctuates somewhat, but has a predictable 11.5% yield. So you go from 50 vol, 30% CAGR to a 2 vol, 11.5%. But really what people want is a yield product that has no volatility and just pays you and is stable, right? And that is what he calls digital money, and that's what USDh is intended to be. And essentially, we take Strategy's STRC and we convert it into a stablecoin product that has no volatility, or as close to no volatility as possible, and call it 8 to 10% yield. So we take some of the yield, we put it away into our reserve fund that can buffer out on any of the short-term volatility, and then we give folks access to a daily yield that is 8 to 10%.
So if strategy is paying out monthly or soon to be, twice a month, and you are paying out daily, how are you able to pay out daily with strategy paying out monthly or every 2 weeks?
Yeah, we
Is it just
collect
sort
the
of get
dividend
averaged out over that time, or?
Yeah, exactly. We collect the dividend, and then we pay that out on a daily basis on like a fraction of what we collected on the
Yep.
dividend side. We do some other elements as well. We have the reserve fund to buffer out any of the fluctuations. So if the price drops, just like it did the last couple of days or last week or so, it went down significantly, then the holder of USDh doesn't see that drop and still gets paid the dividend, and we're able to buffer that with our reserve fund. And then we also are in the process of adding hedging mechanisms. You have to be able to withstand a drawdown of STRC that is more significant. We have seen that in the past. It went down to, I think, the 90 range, so a 10% drop. And in order to withstand that and potentially even more, we're setting up hedging instruments, mainly options. You can put options on the underlying MSTR strategy stock to make sure that if that happens, we have a profit on the book and can use that balance to honor any redemption and the yield.
Great. And how is strategy themselves paying this yield to STRC holders? We've been seeing in the news, over the past few weeks, Saylor has started to hint at the fact that they might be, selling some of their Bitcoin. They haven't done that yet. They bought more Bitcoin this week. So how are they actually paying that yield, and how is that being funded on their side?
Yeah, so the yield is paid in cash. So it's a USD. If you hold STRC on your brokerage account, you can just get a USD payment on the dividend date. And the way that they're paying it, they have a dollar reserve, which is quite substantial, around $2 billion, that they basically hold in reserve to pay the dividend. I think that lasts for, call it, the next 16 plus months. And then they have the ability, and this is what Saylor came out with and got some controversy around it, and they have the ability to sell some of their Bitcoin. Their goal is not to sell Bitcoin. The goal is to accumulate Bitcoin. And he said, we're always going to be net buyers of Bitcoin, but we also have the ability to sell some of it. And the reason why he came out with that statement, and he explained it in some of his interviews, is that he needs to be able to show that the balance sheet of Bitcoin is actually valued at the current market price and can be marked in credit ratings and in general understanding of his company's balance sheet. So he can fund the STRC dividend through the Bitcoin that is on his balance sheet, but the intention of strategy is not to just sell all the Bitcoin and pay out the dividend. It's to accumulate more Bitcoin.
Yeah, Kate and I talked about, I think it was last week, I saw a tweet from Saylor or maybe it was an interview that he was in, and he was sort of comparing selling of Bitcoin to, selling and buying property. And he was talking about, let's say if you buy a piece of property for $10,000 and it goes up, 10x, right? And you sell that same piece of property for $100,000, then you can take that $100,000 and you can go and buy more property with it. And that's how he was trying to, explain the reasoning for, maybe selling some Bitcoin, but continuing to accumulate more over time. And I thought
Yes.
that was
Yeah,
a pretty
that
good
makes sense.
analogy. Yeah.
Yeah. I think nothing has really changed. He just made explicit that he has the ability to sell Bitcoin, which is important to make sure the market understands the value of his balance sheet.
Yeah. Yeah. We know, Saylor's not going to be selling it all. Obviously, he's he's going to be very strategic, about what they continue to do.
Yes, actually.
So let's take a look at these, these new announcements that you made. First one is a new product, which is hBTC. Can you maybe give us a breakdown of hBTC, how, it integrates in with, with USDh that you already have, and yeah, just give us a little bit more info on hBTC.
Yeah, absolutely. So it talks about USDh, which is our dollar yield product backed by Bitcoin basis, Bitcoin credit, essentially a dollar product that generates yield from Bitcoin sources. There's a massive demand for Bitcoin on Bitcoin yield. And so we have released hBTC, which is our Bitcoin yield product, which is live on Stacks. Today has over 50 Bitcoin in it. We're rolling it out to more folks. And what hBTC does is essentially leverage the Stacks infrastructure and the USDh yield engine to generate Bitcoin on Bitcoin return. And how that is done is it's quite simple. We call it the Bitcoin carry trade. Essentially, you take Bitcoin, you borrow USD value against that Bitcoin, which is a very well understood, very established market today. Bitcoin is a great collateral asset because it's very deep liquidity. It's 24/7, so you can easily liquidate it if you need to. And so there's a lot of markets, a lot of liquidity that wants to lend against Bitcoin. We are the borrower. So we take Bitcoin from users, we put it onto a money market. Today, that's Zest on the Stacks blockchain, and we borrow stablecoin liquidity against that at a 50% LTV. So 50% of the value of the Bitcoin we borrow in dollars. And then we deploy those dollars into USDH. And so we're essentially earning from stretch and from basis, and that is a 8 to 10% yield. And we're borrowing against the Bitcoin at, call it a 3 to 5% borrow rate. And there is a delta there, which, for simplicity's sake, let's call it 5% between how much we pay on the borrow side versus how much we make on the USDH side. And we harvest that then back into Bitcoin. So if we borrow at 4%, we earn 10%. That's a 6% delta. 50% of that's a 3% we make on Bitcoin terms. So we take those 3%, we swap it back into Bitcoin. So for any user that deposits into hBTC, they have a Bitcoin on Bitcoin yield experience. There's a lot of demand there. The system is quite simple, quite easy to understand. And what we have focused on with hBTC primarily is one, transparency. We believe that any product that offers you yield on Bitcoin needs to be one, very simple to understand, and two, needs to be independently verified. So you need to be able to go on chain. You can go to our website, obviously, and see the data there, but you can also go on chain and actually verify that what we tell you is being done with your Bitcoin is actually it's happening, and you can underwrite that risk that way. So it's fully transparent. You can see every transaction on chain. You understand what is happening. And then secondly, obviously, if you take a loan against Bitcoin, there is a risk. Right? There is a liquidation risk. There is a loan that needs to get managed. Bitcoin is a volatile asset. It goes up and down. And that liquidation and that LTV, as they call it, loan to value, needs to be managed. And we have set up a very robust system that allows us to essentially rebalance that loan in real time. So if Bitcoin fluctuates by 1% up, or really if Bitcoin goes up, we borrow more. There's more. Bitcoin tends to go up a lot. If Bitcoin goes up, we can capture more of that dollar value and convert it into Bitcoin yield for you. But if Bitcoin drops, we're also able to repay that loan very quickly and make sure that the LTV always stays at that 50% level and doesn't get into a zone where it can be potentially dangerous for liquidations. So yeah, that product is live today. We're actually rolling it out this week to more users. You can sign up to the wait list. It's going to go out to more users in tranches. You can head over to hermetica.fi and punch in your email, and you get access in the next couple of tranches. But yeah, that's a product. I don't know if you have deeper questions on exactly how it works.
Yeah, I'll just say I was lucky enough to get early access a few weeks ago when you guys first opened it up. And obviously, we don't provide tax or financial advice on the show. But for me, this hBTC product is a little bit more attractive than USDh because it means that I don't have to sell my Bitcoin, into like a stable coin. For me, I'm treating it like a bridge. It was just a little bit more palatable for me as like a long-term Bitcoin holder to take some of my Bitcoin and put it into hBTC to earn a yield in that way.
Yeah, excellent. And that's exactly what it's designed for. And that's what we're seeing a lot of folks coming in with. Like we're all, I think, Bitcoiners in this space, and especially listening to this podcast, we have our stack of Bitcoin, and a good chunk of that is in cold storage, hopefully, and it should stay there, in my opinion. But
Yep.
maybe there's
I agree with you there.
some portion of that, and that's how it works for me as well. Some portion of that where you're willing to take a little bit more risk and earn a little bit of a reward because you want to accumulate more Bitcoin, right? And that's where hBTC comes in. It's a product that has risk, and maybe we should talk more about what those risks are, because anything that generates yield and you get an economic benefit, there will always be some risk, and you need to understand what that risk is. But the risk is understandable and transparent, and you can underwrite that and then get paid to take that risk and get paid in a very substantial way. It's been around 5% since launch. So yeah, maybe let's talk more about the risk. Or
Let's do it. That seems like a great segue.
Yeah. So if you look at the different risk buckets here, I think we can think about the flow of funds. I recommend always doing that to folks because you want to understand where the money goes and what the different steps are and what risks are being taken in those. So if you think about the flow of funds, you can show up with just native Bitcoin, just BTC, in your Ledger, in your Xverse wallet, and sign into Hermetica. And what happens when you interact with the hBTC product is that you, in a first step, bridge the BTC into stacks. And that is done through SBTC Bridge. It's a diversified signer set. I think it's around 15 signers today and has a quorum of, I think, 11. So you're essentially trusting that infrastructure. You're trusting that those signers are acting morally right and are aligned with the network, which they have been. Historically, there's many hundred of Bitcoin in the network. Those are all publicly known entities that operate that bridge. So I think that is a risk that can be well understood and has been battle tested.
And that's one of the big differentiators for Stacks is that it is public. You do know who those signers are compared to maybe like Liquid, where it's a little bit more opaque on who actually is signing those transactions.
Yeah, absolutely. I think that the SBTC bridge is a very well-designed bridging product and has been operational for, what is it, like a year and a half now, and without any issues.
Yep.
So that's number one. Then the SBTC gets deposited into the hBTC smart contracts. And so there you're taking the risk of those smart contracts that are on our side. We've created the smart contracts that have been audited. They're very simple smart contracts, but they essentially allow us to take the hBTC and deploy them into Stacks DeFi. We don't have the ability to withdraw the SBTC. That's a very important element to it. So it's a self-custodial product once it is on Stacks. We don't have the ability to withdraw. Nobody really has the ability to withdraw, but we have the ability to deploy that capital into Stacks DeFi. And what we do is we deploy that today into Zest smart contracts. So here on the second step, you take smart contract risk on the vault, the hBTC vault, as well as on Zest. Both of them are audited. Both of them have bug bounties and have been in production for multiple months. Zest holds, I think, 800 Bitcoin. So there's a lot of capital that is backing that product or that infrastructure and time. Now, once it is on Zest, we borrow against it and we create the loan, right? We create a loan product, which is Bitcoin on Zest and stablecoins borrowed against those, which we then deploy into USDh. So on that side, the risk that you're underwriting is the loan and the ability for us to manage that loan, which, as I described, we have spent a lot of time and a lot of engineering effort to make that as secure, as institutional grade as possible, where every 1% of change in the LTV is automatically rebalanced. And you can see that in real time on chain and actually validate that it's happening. So those are the major risks. You have the infrastructure on the bridge side. You have the smart contracts on the hBTC side as well as on the Zest side, and you have the economic risk of managing a loan and those transactions. Plus, there is obviously the deployment into USDh and the infrastructure that needs to be underwritten there. So if there is an issue with stretch, that would be obviously a risk that you're taking, because if the yield that doesn't get paid out, or there's an issue with strategy in general, there could be a potential loss of those funds, partial loss.
Super helpful. I was also just going to ask you a couple of questions about your transparency dashboard. You mentioned it earlier, but you've been publishing, I think daily or not daily, but very, very regular transparency reports. You have attestations that you're publishing for USDh. I imagine you're going to be doing the same for hBTC as well. Can you talk a little bit about the attestations that are being published by your custodians, and just how that verification works?
Yeah, absolutely. So we work with some of the best institutional grade custodians in the space. These are qualified custodian, regulated custodians, especially Copper and Sefu. And these custodians hold the Bitcoin that underpin USDh, as well as the stretch that underpin USDh. And once a month, we ask them to attest to the value that they hold, and we publish that in our attestation reports. So you can go to our transparency dashboard. At the bottom, you see all the attestations listed once per month. You can click in and you get all the gory details of where the funds are, what the funds are, and who holds them, and the CEO of that company attesting to that value being in their balance. We've done this for, I think, 16, 17 different attestations. So there's a track record there. You'd be consistent. That's on the USDh side. On the hBTC side, we don't have to publish custodian attestations because there are no custodians. It is all on chain. And the transparency dashboard that we have there basically points you to the data sources on chain, and you can validate it yourself. It's essentially a real-time proof of reserve system where you can always click in and understand from a third party, meaning the Stacks blockchain, which has a diversified signers node network that is completely independent from us, and you can see the assets in real time on the chain and verify it that way. So hBTC is, I call it full transparency. There's really nothing that is happening that is not shown publicly and you can't verify yourself. On the USDh side, we have a transparency dashboard that shows you every day what the positions are and what's going on in the system, and then a monthly attestation that underwrites the actual amounts that are held with the custodians.
Very helpful. So I mentioned at the top of the show, we wanted to get you on a little earlier, but you've been doing a little bit of a roadshow over the past few weeks at Bitcoin Vegas and Consensus. Obviously, you can't talk about specifics, but how have your conversations been going, maybe with institutions and other folks on hBTC, kind of while you've been on the ground pitching it or talking about it?
Yeah. I've been talking to a lot of folks. The interest in digital credit products is outstanding. I think it's really great to see. There's a lot of interest. There's a lot of interest in Bitcoin yield, and I think there's a lot of interest in Bitcoin yield that is done right, in that it is transparent, easy to understand, and in production and can be deployed to. And so we've been talking to institutions, family office, high net worth individuals, and are in the process of rolling it out to more folks. There's a lot of demand. There's more demand that we actually have capacity for right now. So overall, very positive and very exciting for obviously Hermetica products, but also the Stacks ecosystem.
Absolutely. Yeah. From the outside looking in, I was super impressed with the reception of hBTC. We even had Saylor shouting you guys out on stage at Bitcoin Vegas.
Yeah, right.
Very special.
That was great.
Can you give us any idea of how that came to be? How did Saylor get acclimated with hBTC and what you guys were doing?
I actually don't know. It's not something that we planned, which is even better.
That's really
right?
special.
Yeah, it is.
Yeah.
We're focused on putting out excellent products that we spend a lot of our brain power, engineering power on to make really perfect, or as close as perfect as possible. And we put out the announcement that we introduced STRC into USDh and hBTC. And I think that got picked up by Saylor. There was a retweet from him from the strategy accounts. And I think that got them to look deeper into it and then put it on their slideshows for Bitcoin Vegas and talk more about it. So I'm actually still it's not fully clear exactly how that happened. I think it was just like X doing its magic and connecting the people to each other.
Pretty amazing. So we're recording this a few days early, but you already kind of mentioned it a little bit, but hBTC, was capped, I think, at 50 Bitcoin, you said, but you're now announcing that you're opening it up to more people.
Yes. Yeah, we are in the process of rolling it out. We increased the cap to 75 and are getting in more deposits as we speak. And so, yeah, for anybody that is interested in playing around with the product, getting exposure, earning some yield, you can sign up for the waitlist. We're going to continue to roll it out in tranches. It's very simple. You go to hermetica.fi, scroll to the bottom, there's a waitlist, or you go to the app and you can sign up directly there, and you will get an email invite as soon as the capacity frees up. There is a lot of demand, so get on the wait list. The problem here is more the capacity on the borrow side, the borrow rates, etc., for us to be comfortable opening it up to more and more people as we go. But we will certainly open it to more folks.
Yeah, I think on the day that you announced it, I think on the same day you reached capacity, right? So definitely the demand is there.
Yeah, the demand is really insatiable. We reached capacity, I think, in less than 24 hours.
Yeah.
Yeah, it's very exciting.
Well, congratulations on all the success with both USDh and with hBTC so far. And yeah, again, it was so cool to see folks like Saylor giving you guys a shout out. We'll make sure that we have in the show notes a link to Hermetica where you can also go check out their transparency dashboard and get just much more in depth on everything else there. If anybody, I guess, that's listening has questions about Hermetica, more on the risk side, transparency side, should we send them to you to reach out to, or where can we send them to find out more information on that stuff?
Yeah, you can always DM me on X. My DMs are open and I'll make sure to reply and answer any questions. If you want to read up on the details, you can go to docs.hermetica.fi. Our documentation is quite extensive, including risk controls, transparency, etc. So you can dig in there and get a lot of information, or point your agent to it and ask the agent question and get information that way. But yeah, reach out on X with questions, suggestions, anything to engage.
Wonderful. Well, Jakob, we're super appreciative of you taking the time to walk us through everything that Hermetica is doing. Congratulations again on the launch. I know you guys are always cooking, so hope to have you back on the show again sometime soon, whenever you have your next announcement.
Yeah, thank you, Brandon. My pleasure.